Focus. Ideate. Innovate. Enable.
Hello and welcome to this very special presentation of yet another CNBC TV 18 Investor Camp, this time from the big city of Bangalore. It's been a really exciting phase for the market. We've seen a union budget which went down quite well with the market, and then a surprising rate cut from the Reserve Bank of India. But then we've had fears of interest rates going up in the US, and that's led to quite a bit of turbulence out here.
It's been a good month so far. I mean, the month of March has seen the Sensex hit that psychological 30,000 mark for the first time ever. We've had a surprise rate cut from the RBI. We had a pragmatic budget. But in the last couple of days, you get a sense that perhaps the prudent thing to do would be to take profits. So we're here with a lot of guests to tell you what to do with your money. Udayan, hi, good morning.
Hi, morning.
Good times for the markets. Of course, the last couple of days have left you feeling a bit disappointed. But the key question is what now?
You can see the numbers in the mutual fund stuff that people are rolling into the equity market. And I think that's going to be the dominant theme of the next 5-6 years. More than what happens in small 5-6 month phases. You will get bouts of correction. We may already have started our process of maybe a phase of consolidation or correction, which was quite overdue. And these will happen in the course of the next 5 or 6 years. The most important thing to me is that people had such disaffection for this asset class called equities, and that has changed. You know, to turn a switch in the head of people, particularly people who are very rigid and conservative with their investing styles, like Indians tend to be, we are big savers, that takes a long time. It took us 12 to 18 months of a continuous bull market for that switch to turn on, and I think now it's firmly on. So we shouldn't let this correction, which is upon us, I think, scare us. I think we will have some scary times maybe in the next 3 to 6 months. I don't think it will be such an easy ride. Some of the headwinds which we spoke about earlier have started picking up. And I think now, at least in the near term, you could count more headwinds than tailwinds. And this may present a great opportunity for people who are still underweight on equities, which I still imagine a lot of people in this room would be. I don't think everybody's got their exposure up to the levels that they would ideally like in a bull market. And I think the next 3 to 6 months may present that opportunity of people who were quite late in getting into the market.
We keep saying that this is the Modi-led rally that we're seeing. But if you look across the world, I mean, the S&P Dow are at record highs. The Nikkei is at a 15-year high. Most global markets are doing well. Do you reckon that 2015 could be a year where globally equities as an asset class does well?
It could, but it could first hit a few speed breakers. We should not be frogs in the well. It's important to understand that we have a government after many years which is trying to do many pro-business things. And that's a very big tailwind for the stock market. The stock market has priced that in to some extent. It's also important to recognize that while we are now increasingly less reliant on global money and increasingly getting more reliant on the domestic source of money which is coming into the stock market, we cannot say that we are divorced from what's going on globally. Interest rates going up in the US is a seminal event. You can't say it will not affect us at all, and we'll just breeze through it and keep hitting new highs. So, in the headiness of being focused on our own economy for the last 6 or 7 months, I think we'll be making a mistake by saying global events do not affect us at all. That would be a completely big error in my judgment. So I think these things will affect us. Now, to what extent? Because of the India tailwinds, which we speak about continuously, that our macro is shifting for the better, earnings have not picked up but will pick up in 2-3 quarters hopefully, that there is a longer term story out here. Now, will that longer term story make the bottom of the market higher than what it would have been otherwise in the event of a global correction? The answer to that could be yes. To make it simply, without talking about in jargon, if India did not have such a strong story and there was a great global correction, maybe the Nifty would have gone back to 7,000 or 7,500. Because of the strength of our story and the improving technicals, which is domestic investors coming back into the stock market, we may have a situation where India outperforms but still slips and corrects from the current levels, where we go down to maybe 8,000 kind of levels and then spend a lot of time in 8,000 to 9,000, which is very acceptable in the course of a 5-6 year run. But if that happens, I think it will frustrate a lot of people, because we've just come into the market expecting we'll double our money every 6 months, every 8 months. It's not that easy. It can never be that easy. So I think we may now be at a phase where the next 6 months may, if not be traumatic for the market, it may be slightly frustrating in the context of how good things have been over the last 12 or 14 months.
So the Nifty's made a new high and then it's come back. And this volatility has raised a lot of questions about what kind of returns people should expect for the rest of 2015. So let's flag off proceedings with our first speaker on that very subject, Nilesh Shah of Envision Capital.
Last 1 year, we've been amongst the best performing market. The Sensex is up about close to 40%. And there's really no market which stands anywhere close to us. There is, of course, one Shanghai, but that's basically been in a bear market for a very, very long time. But I think the last 1 year is really not a reflection. And I think we as investors, long-term investors, believers of the India story, will need to really look at it. And over the last 10 years, there have been fair bit of turmoil. So we've had great times and we've had bad times and we've had good times. We've had change in political leaderships. We've had rise of commodities, fall of commodities, inflation, deficits. Whatnot has happened in the last 10 years. And still in the last 10 years after all of this, our markets have delivered a compounded 16% annualized return over a 10-year time frame. 16%, mind you, this is basically tax-free, post-tax, which I think no other asset class has delivered.
India has been having a bull market virtually every decade. And this decade is no different. Indian markets and the Indian economy continue to be headed higher. And clearly this bull market, which had probably started off sometime between 2011 and 2013, in those levels of 15 to 18,000, and at that point of time there was a fair bit of pessimism. Like all bull markets, this bull market has also been built on a wall of worries, with worries around inflation, sluggish growth, deficits, policy paralysis. These have really been the key points where the foundations of this bull market have been laid.
The biggest initiatives of this government have been auctions. We're now collecting lakhs of crores from auctions. So basically the coal auctions, roughly 2 lakh crore. Telecom auctions, roughly 1 lakh crore. These are huge numbers. On one hand, we struggle with 20, 30, 40, 50,000 crores of targets for disinvestment. But on the other hand, in auctions, we're getting crazy numbers. I mean, this is something which never has happened in India and probably is a fantastic new way to raise resources for development, bringing in transparency, participation by a lot of players. So I clearly believe that I think if I were to say that one big achievement of this government has been to basically start auctions, implement auctions.
Clearly over the next 5 years, we are likely to see this bull market advance even further on initiatives and earnings getting driven by economic reforms, a lot of initiatives, higher consumption, huge investments in public investment, and India becoming an easier place to invest. Of course, the ride is not going to be smooth. There will be bouts of corrections and consolidations driven by local and global factors. But I think it's important for investors to do their homework well, be enough in equities. It's never too late. They will have to carry a very high degree of conviction to ride this volatility. The hunt for value will have to be there. Focus on managements backed by entrepreneurs and focus on quality will have to be the paramount importance. And clearly, if one is able to do homework well and take a lot more risks, it looks like that a lot of the tier 2, tier 3 companies, the mid-cap companies, I think could kind of be disproportionate movers in this bull market and end up creating a lot more wealth.
I think the faith in India is very important. So while everybody says make in India, innovate in India, grow in India, but I think you need to have that faith in India. Believe in India. I think if you want to run this India marathon, you want to create wealth, you want to do value investing and run that marathon over the long run, it's very, very important to keep that faith in India. Believe in India. It's a fascinating place to be in as investors, and I think it will continue to be there in the long run. So I think this is our chance to fly. We are in the midst of a bull market, and this bull market has a long way to go.
That's Nilesh of Envision, our first speaker at the Bangalore camp. There's lots more coming up. After this break, when we return, we'll have Deepak Shenoy and Sudarshan Sukhani speaking at the camp. We are back in a minute.